The Peter Schiff Show.
Today's podcast is sponsored by Shopify. Shopify is a platform designed for anyone to sell anywhere, giving entrepreneurs like myself the resources once reserved for just big business. Sign up for a $1 per month trial at shopify.com/gold, all lowercase.
Good evening, everyone. There are two topics that I want to discuss on this evening's podcast: inflation and TikTok. Although the TikTok discussion, I think, is much broader than that. But let me start off with inflation. As I have been warning and explaining for some time on this podcast and on social media, the conventional wisdom that the Fed has won the inflation war, that its rate hikes have done the trick, the inflation genie is back in the bottle. Sure, it's not quite 2%. It's a little over 3%, but we've gone from 9 to 3, so we're most of the way there. And it's just a matter of time, and we're just going to coast down to 2% and magically stay there. And because of this, the Fed could substantially cut interest rates because we don't need 5% interest rates anymore. We could substantially reduce them once inflation goes back down to 2%. And I've been saying that is complete nonsense. That view could not be more widely held, yet it could not be more wrong. I mean, first of all, even if inflation was going to go down to 2%, substantial reductions in interest rates would not be warranted because you have to have a positive rate of interest. So let's say inflation is 2%. If rates are 4%, you're only earning 2% after inflation. And a lot of people pay taxes on that 2%. So 4% maybe if inflation's 2%. Well, we're not that much higher than 4% now. We're, 5%, 5.25%. And if you look at 30-year treasuries, 10-year treasuries, they're just over 4%. So they're priced right now for 2% inflation. But we're not going to get 2% inflation. And even if we were, there's not a lot of room for the Fed to cut. Because if they were to bring rates down to 3% or 2%, inflation wouldn't stay at 2%. That would make it move up. But the reality is it's worse than that because inflation isn't going to coast down to 2%. It's already headed back up to 9% and probably higher than that. And the data supports this conclusion. So for people to believe this nonsense about inflation, they either have to be blind to this data or they're deliberately being disingenuous about these forecasts. And let's start with the CPI number that came out yesterday. This is the February CPI. We're going to get producer prices, I think Thursday, what would be tomorrow. So I'll talk about them next time. But the CPI came out, and as I expected, it was hotter than expected, meaning higher, revealing more inflation. Now, the headline number was not higher than expected. They were looking for up 0.4, and we got up 0.4. But up 0.4 is a big number. It's not indicative of 2% inflation. 0.4 is more like 5% inflation, right? If you have 0.4 every month. So if you think we're going down to 2%, this 0.4 certainly doesn't confirm that. But I guess the markets thought, well, it'll be a one-off number and then it's just going to go down, right? That's wishful thinking. But the year-over-year headline number actually inched up. It went from 3.1 to 3.2. Now, that's the wrong direction. If everybody thinks we're headed to 2, why did we just move higher? Why do we move to 3.2? We're going up, not down. The core number, excluding food and energy, that was the beat or the higher number. It was supposed to drop to 0.3 from 0.4 in January. But instead, we got another 0.4. So back-to-back 0.4s in the core. That is a high number. You need the number to be half that. if you're trying to get 2% inflation. So the number is double what the Fed would need. And again, the year-over-year core also above expectations. It was 3.8%. It was supposed to drop to 3.7. Last month was 3.9. By the way, that 3.8 number, that is actually like a 3-year low in the core. So the core is still coming down, but the core never got up to 9.1. The high for the core was about 6.6 back in June of 2022, I think, was the high watermark, for these numbers. So the core has come down, but the headline number really stopped coming down months ago. In fact, the headline, the low was 3%, right? So we're 3.2 now, but we got to 3% months ago, like 6 or 7 months ago, when we got down there. I'm scrolling through Twitter trying to. I tweeted out the exact date that we got down there, and now I forget. But I've been talking about that ever since we hit 3%. We moved up to 3.1, 3.2, 3.1, 3.2. We've never touched 3% again. But if you look at all the other anecdotal data, it points to a much higher CPI. I tweeted out today, and you should just go to my Twitter. I'm still not at 1 million followers. I'm close now. I'm less than 1,000 followers away. I'm looking at my Twitter, and I got 999,400 followers. Now, I could lose some overnight. I keep losing them. I don't know what's going on with the algorithms, but I'm getting close. So maybe at some point by tomorrow, I'll have 1 million Twitter followers. Who knows how long I'll keep them. But go to my Twitter page, Peter Schiff. As you're watching right now, you can go there on another, open up another window. And if you don't follow me, right? Maybe I can move up to 1 million as I'm doing this live podcast. But scroll down a few tweets, and you'll see this chart that I put up there of the CRB index. Now, the CRB index had a big move up today. It was up a little over 1%. And there were a lot of particular commodities that were very strong today, particularly in energy and metals. Oil was up, I think, 2.5% today, over $2 a barrel. But big moves in metals, and I'll get to that. Copper, I think, might have had the biggest move. Or no, silver actually was up more. I think copper was up about 3% on the day. Silver was up about 3.3%. But really across the board. But the reason I wanted to put up that chart, if you look at the peak of the CRB, it was back in the summer of 2008. And that's when the dollar index was at an all-time record low, down around 70. This is before the financial crisis when the dollar rose. At that time, the CRB was above 450. Now, the bottom of the CRB was right about the time of COVID. It was in early 2020. And then when COVID hit, the CRB really started to rise. And that, of course, bled into the CPI. Now, if you look at the high water mark of that chart, which comes in, I just lost it. Where is it? So the high water mark is in May of 2022. The very next month, June of 2022, that's when the CPI topped out at 9.1%. Then the CRB began a correction, right? And if you look down at the low point of that correction, it was in May of 2023. The very next month, it was June of 2023. That's when the year-over-year CPI hit the low point of 3. So the CPI bottomed a month after the CRB bottomed, and the CPI topped a month after the CPI topped, which makes sense because the headline CPI is dominated more by commodity prices. And so it's commodities that drove down the inflation rate. It wasn't the Fed, it wasn't the interest rate hikes, although indirectly you could say it was because the rate hikes caused the dollar to go up, and the dollar going up brought down commodity prices. So it was the market's response to those rate hikes, not the rate hikes themselves. But now, of course, the markets no longer expect rate hikes. They expect rate cuts. That's why the dollar is headed lower. And commodity prices are on the way up. If you look at that chart, it looks explosive. I think we are very close to a major move up in the CRB. In fact, I think the CRB can take out the 2008 high before the end of this year. That's a 40% increase in commodity prices. Now, if it doesn't do it in 2024, it'll complete that by 2025. But even if it gets halfway there this year, that's a 20% increase. What is that going to do to the CPI? Obviously, it's going to send the CPI much higher. That's what it did before. Just look at that chart and see what was going on with commodity prices and how that was a leading indicator of the big explosion that we got in the CPI, right? Commodities started really moving up in 2020, and then inflation really picked up in 2021. Well, commodities bottomed out in May of 2023. That's almost a year ago. They bottomed out, and now they're really starting to rise, and we're going to start to see that in the CPI in the coming months. So what we saw for the February CPI, that's just a small taste of what's to come. And again, this is more evidence that anybody who thinks that inflation is going down to 2% has got their head buried in the sand. They're not looking at what's going on. But that means all these consensus trades that are built around this reality, everybody expects the Fed to be able to cut rates because everybody expects that inflation is dead and buried. But when people realize that it's not only dead, right, it's alive and stronger than ever, all of these trades have to be unwound. And all the people who have been selling gold because they thought there was no inflation are going to have to turn around and buy it. Where they're going to get it is beyond me because there isn't going to be any gold for sale. Anyway, let me take a quick commercial break. I'm going to continue this on the other side of the break, so don't go anywhere.
Think of your favorite entrepreneur. They wouldn't be anywhere without trusted partners. If your commerce platform is scaring away potential customers instead of converting them into lifelong fans, you have to try Shopify. That's Shopify's new sales sound. Shopify is the commerce platform revolutionizing millions of businesses worldwide. From the launch your online shop stage to the first real life story stage, all the way to the did we just hit 1 million orders stage, Shopify's there to help you grow. Whether you're selling shipping supplies or promoting productivity programs, Shopify helps you sell everywhere. From their all-in-one e-commerce platform to their in-person POS system, wherever and whatever you're selling, Shopify's got you covered. Shopify helps you turn browsers into buyers with the internet's best converting checkout up to 36% better compared to all other leading commerce platforms. And sell more with less thanks to Shopify's magic, your AI-powered all-star. Shopify powers 10% of all e-commerce in the U.S., and Shopify is the global force behind Allbirds, Rothy's, and Brookline, and millions of other entrepreneurs of every size across 175 countries. Plus, Shopify's award-winning help is there to support your success every step of the way, because businesses that grow with Shopify. But what I love most about Shopify is no matter how big you want your business to grow, Shopify gives you everything you need to take control and take your business to the next level. Sign up for a $1 per month trial period at shopify.com/gold, all lowercase. Go to shopify.com/gold now to grow your business no matter what stage you're in. Shopify.com/gold.
All right, so I'm talking about the hotter than expected CPI numbers that came out yesterday. And, despite the fact that they were hotter than expected, the markets didn't seem to worry too much about it because the markets were higher generally, although there were, some of the NASDAQ stocks were coming down a bit today and yesterday as well. But the main market that got hit was gold. Gold was down over $20, which, as the prices are higher, $20 is not as big a move as it was when gold was 1,000. Now that it's closer to 2,200, but gold dropped $20, maybe a little bit more. And the catalyst again was that inflation was worse than expected. Now, I've been saying on this podcast that that's actually good for gold. Worse inflation is good for gold. It's not bad for gold. But the market still looks at it the other way because in their mind, oh, inflation is worse than we thought. Oh, it just means that the Fed is going to have to delay these rate cuts for another month or two. And that means the computer algorithms sell gold, right? But the reality is it doesn't even matter when the rate cuts come. Gold's going up because the Fed shouldn't even be cutting rates. The Fed should be hiking rates. The market still doesn't get that. Again, they just think the hotter than expected inflation numbers means the Fed has to fight a little bit longer to make sure inflation is at 2%. And all it has to do to assure that is postpone the first cut by a month or two. But that's not the case. It doesn't mean the Fed has to fight a little harder. It means the Fed hasn't fought enough and it's lost and inflation has won. And so inflation is going to keep getting worse. And so you should be buying gold. But even though gold went down yesterday, it didn't stay down because today it almost recovered all of yesterday's losses. It came pretty close. Silver recovered a lot more of yesterday's losses. In fact, silver had one of the strongest days I've seen. It was up better than 70 cents an ounce. In fact, as I'm watching now it trade, it's actually at $25, which is higher than I think it got at any point during U.S. Trading hours. 25.05, 25.06, up 10 cents. So I don't think we hit $25 during market hours in the U.S. today. And now we're above $25. I've been really, telling people on this podcast recently to buy silver, and now it's moving. And silver still has to double to get back to its high from 2011, which is the same high it had in 1980. Imagine that. I mean, how many things can you buy for half of the price that people were paying in 1980? A lot of the people that watch this broadcast weren't even born in 1980. I think when silver gets above 50, which it's going to do, once we break through 50, I think that's going to be the new support. So 50 is going to be the dip that you hope to buy silver at. So right now, you got to double from here just to get to what's going to be the new floor. Just like I was saying that 2000 was the floor on gold, soon 50 will be the floor on silver. So right now you're so far beneath that floor that it's a great buying opportunity. Now, I talked to the guys at Schiff Gold and business has been picking up, but they tell me that there are still some people that are waiting for a pullback. You've got your pullback already. That's gone. At this point, you don't wait for a pullback, you buy. Now, that doesn't mean that there can't be a pullback. There always will be pullbacks. I just think they're not going to be substantial enough for it to be worth the risk. The pullbacks will be so shallow and so quick that you'll probably miss them anyway. And I think most people who are waiting for a pullback in either gold or silver will end up buying at a much higher price than if they just bought right now. So as far as I'm concerned, if you want to buy gold or silver, you just buy it right now. It doesn't matter if it goes down a little bit after you buy it, right? Because you own it. The problem is not buying it, waiting for a lower price that never comes, and then never buying it at all, or ending up buying it at a much higher price than you could have bought it at had you just pulled the trigger. So if you're one of the people on the fence, just buy your gold and silver now. You should have bought it weeks ago when I was pounding the table on it. But so what? I'm still pounding it because now it's a breakout. It's confirmation. Before I thought we were going to break out, and now we have. So it's a good time to buy. And again, the other thing about buying gold and silver is no one's talking about it. I mean, investors aren't talking about it. The media is not talking about it. This bull market is happening in complete secrecy. It's stealth. It's not on anybody's radar. What does that tell you? I mean, you never get an opportunity like this. Everybody is talking about Bitcoin, right? What does that tell you? Everybody talking about Bitcoin. Nobody is talking about gold and silver. What do you want to buy? What everybody's talking about or what no one's talking about? When everybody's talking about it, it's time to sell, right? Now is the time to buy. You know, MicroStrategy actually they completed their acquisition of, I think, 600 billion or 600 million or 800 million worth of Bitcoin. I forget the exact amount. At about 68,000 or something like that. I mean, temporarily, yeah. Bitcoin right now, I believe, is at 72,000, 73,000. Had a new record today. MicroStrategy stock hit a new record. Yeah, we're just below 73,000. We were above it a little earlier today. So his average cost, I think, was 68,000 and change. So on paper, he's ahead. But he borrowed all that money to buy the stock. Now, he didn't pay a high rate of interest to borrow the money, but it's still borrowed money that has to be paid back. Now, why would people loan MicroStrategy all this money when they know he's just going to buy Bitcoin with it to only get like a 1% yield? The coupon is very small. Well, one reason you might do it is because it's kind of like a put option. I'm long Bitcoin with like some protection because it's a convertible. So if Bitcoin goes down, I could just get my money back. But if Bitcoin keeps going up, I can make a lot of money. So they may be looking at it as a way to play Bitcoin on the upside, but have some limited downside. And by the way, MicroStrategy's stock price is more than double the value of its Bitcoin. And of course, the software company is practically worthless relative to the overall market cap. So if you buy MicroStrategy, I mean, the software company, I mean, they might as well spin that off. They don't even need it. Apparently, they just need it to earn money to buy more Bitcoin. But now I guess they need it to pay the interest on the money they borrowed to buy Bitcoin. But that might be one reason. But I think another reason that somebody smart might have done this is because they want to short MicroStrategy stock because the convert covers their losses. Now, they can't convert right away. They have to wait for, I think, till 2029. But sophisticated investors could probably collar this or get a strategy where they can short MicroStrategy and know they're not going to have to put up the margin because they can show the custodian that they have the right to buy the stock at a price that's actually below the current market right now. And so it's kind of like a way to have a short with a free cover. And now you can short the stock. And if it crashes, you make a lot more money on your short. And you get your money back on the bonds unless MicroStrategy is completely bankrupt and has no assets. But assuming the Bitcoin is still worth something and they have something of a software company, the people who loaned MicroStrategy money and then shorted MicroStrategy stock and or shorted Bitcoin too can make a huge amount of money on the short and then get their money back. In the meantime, they can go short with the confidence of knowing they can't lose because they have the right to buy back the MicroStrategy stock. So maybe that is really what's going on. Maybe Michael Saylor just gave somebody a noose that they could use to hang him with. Because this whole thing is insane. Remember, I've been saying that he's like the Captain Ahab of the modern day, and his Moby Dick is Bitcoin. Rather talk about Bitcoin whales, right? Well, he's the Captain Ahab, and I think all of the sailors on the SS MicroStrategy are going down with that ship. I think the smart money is getting out, and maybe the smarter money is shorting it, and maybe again that's why they arranged this strategy. But that MicroStrategy buying is one of the reasons that Bitcoin is way up here, because he came into the market and bought all this Bitcoin. And before he bought it, he told everybody he was going to buy it. And so people front ran it. And so he paid the last time he was borrowing money to buy Bitcoin was a prior peak, right? And then the market collapsed, and now it got bailed out by these ETFs. But I also think historically, when they go back and look at this period, it's going to be very interesting in that gold and silver completely broke out in absolute obscurity because they were obscured by a Bitcoin bubble. But by the time they write about it, Bitcoin bubble would have popped, right? A lot of people won't even remember what Bitcoin was, but they'll look back, oh, that was a great opportunity to buy gold and silver. People could have bought silver for $25. Why didn't they do it? Well, because they were, preoccupied with a Bitcoin bubble. I've been getting all of these invitations to join these WhatsApp chats. All of a sudden, I'm getting them all the time, and I'm accepting them just to kind of see what's there. Some of them 400 or 500 members, and it's all scams. I can tell they're pump and dumps. They claim they're working with Goldman Sachs or some other big Wall Street firms, and I think there's a lot of shills in there that are pretending they're making money, and they're trying to get some people who join these groups to, ask for their advice so they can pump and dump some crap. But some of them are dealing with stocks, but most of them are focused on cryptocurrencies. Maybe Bitcoin is the lead, but they're probably going to try to pump you into some other crypto that they're trying to unload. But all of a sudden, I hadn't seen this before, and I'm getting inundated with these scams. And again, this is just another sign, as if we needed one, that you've got this bubble that is ready to pop. But, I think this is, a perfect opportunity for, my clients, because if it wasn't for this Bitcoin bubble and, record highs in Bitcoin, I don't think you can buy gold this cheap. I don't think you can buy silver this cheap. I think the prices would already be much, much higher. And right now, the biggest winners are the foreign central banks, because they have really been taking advantage of Americans who have been selling their gold to buy fool's gold, because they have been taking advantage by buying the gold and selling their US dollars, which lets me move up into my next topic, because these two might end up being related. And that's what's going on with the ban on TikTok. Now, the government is trying to play down the ban, say, well, it's not really a ban, right? We're just forcing China to sell TikTok. And if they don't sell TikTok, well, then it's banned. Well, of course, that's a ban, because first of all, how many people could afford to buy TikTok, or how many companies? You're talking about a huge market cap for a company like that. And do they even want to sell it? And so to me, I don't care how they want to describe it, they're trying to ban TikTok. But banning TikTok is not an action against China. It's an action against American citizens. What the government wants to do is ban Americans from using TikTok. Now, why should we be happy about that? We're losing our freedoms. We're losing our individual liberty to use TikTok if we want to. And who is targeted by this bill? It's American companies and maybe eventually American individuals who have the app, who offer the app on their platform. Right? They become, I don't know if it's criminal, I think it's civil for now, but you can be subject to substantial fines if you use TikTok. Why anybody would think this is a good idea, even if you buy into the idea, well, the Chinese are spreading propaganda, right? It's misinformation. They're brainwashing us. Well, okay, well, warn it. Put out some warnings. But it's not up to the government to protect me from that information. I'm a grown adult. I can decide. Now, I know a lot of the users of TikTok are kids, so let their parents decide if their kids should be using TikTok. Don't let the government become the parent and make those decisions for the parents and for their kids. Look, the typical American kid is getting brainwashed in public schools, right? The public schools are doing far more damage. They are giving out far more propaganda and misinformation than they're getting on TikTok. And the same thing with the American media, right? Plenty of false information is on the mainstream far left media every day. TikTok can't possibly be any worse than that. In fact, I don't think it is worse than that. So I think our children are being bombarded by really socialist propaganda, right? Because that's what's being spread in the public schools and in the media. So they're already getting all that socialist information right here. So what difference would it make if they got a little bit more of it coming out of China? But again, this is just the camel's nose under the tent, because this bill is way beyond ByteDance and TikTok. Yeah, I know it says the names in the bill, but that's lower down. If it was just about banning ByteDance or TikTok, the bill would be 1 page long. It's a lot longer than that. Let me say I have the entire bill up on my website. I'm looking at it on my computer. Let me see if it has the page numbers. I'm scrolling through it. I can't actually tell how many pages this thing is, but there's a lot of stuff in here that's got nothing to do with ByteDance or TikTok. It gives the government, the president, actually broad powers, and it appears to apply to foreign-owned, companies, but it doesn't really define the countries. It refers you to another section of the criminal code to find what countries there are. And so I went to that section to look up, what countries fall under the umbrella of this act. And it turns out for now, there's only 4. China is 1, North Korea, Russia, and Iran. Now, it's possible that Congress can add nations to that section of the code, and that would automatically expand the nations that would be covered under this new bill. And I bet that they'll find some way to use it against American-owned businesses too, not just international businesses. I mean, it really is a step in the direction of more government censorship of what Americans can see, what they can access, information that they can access. Because they can say, oh, yeah, well, this China, oh, yeah, China's trying to spread disinformation. Well, remember, they said Russia was trying to spread disinformation about Hunter Biden or, the 2016 election. I mean, that was all a bunch of lies. I want to be able to get information from foreign countries and foreign sources, because what if that's the source of accurate information? See, if you were a corrupt government and you were lying to your own citizens, it's possible that some foreign entities might try to tell the truth. We do that now, right? We try to get truthful information into communist countries, right? Countries where the government won't allow information in. We try to get it in, right? One way, or you can have a radio tower used to broadcast, free America, and like broadcast signals that people could pick up that were behind the Iron Curtain, so they could get the truth from us because they were getting lies from their government, right? Well, what if the U.S. government is telling us lies, and some foreign governments or people that are in foreign governments are trying to get us the truth because our own government is lying to us? Well, with a bill like this, what the government gets to do is stop that information from coming in, stop Americans from learning the truth so that they'll continue to believe a lie. So you don't want to surrender all of this individual liberty and give more power. This is a power grab by the government to have more control over the American people. Now, of course, it might not just be about that. It may be about, rewarding Facebook. Maybe there's some kind of deal behind the scenes with Zuckerberg. I mean, obviously, TikTok is a major competitor of Facebook. So if Americans can't use TikTok anymore, who's the winner? Well, I mean, kids are going to have to spend their time maybe on Instagram or, on Facebook. They might be a winner. Google could be a winner. More people will be on YouTube or, competitive platforms. And of course, maybe they're hoping that maybe a Facebook will be able to buy TikTok at a price that they never could buy it if it wasn't, at the point of a gun. But of course, this is going to, concentrate even more power in the American social media platforms, which again could just as easily be brainwashing people and spreading misinformation, and canceling people and shadow banning people. I mean, look at all the stuff that was going on at Twitter before Elon Musk bought it, right? Look at how these companies were helping hide the truth from the American public. So why is it that they say, oh, we better worry about what the Chinese do? What about what is going on right here? The truth is that the enemy isn't Beijing. Beijing is not the threat to our freedom. Washington, D.C. is the threat to our freedom. It's Washington that wants to tell me what I can't do, not the Chinese. All the Chinese are doing is allowing me to buy products cheap, and much cheaper than the products would cost if America made them. Nobody is being forced to use TikTok. Now, people are upset that, well, the Chinese, I think when you go on TikTok in China, I think the kids are shown, more sophisticated or more intelligent information or something like that. But in America, it's dumbed down. Well, I don't think that's because of propaganda. They're just appealing to Americans because that's what Americans want. I mean, Americans have already been dumbed down by our educational system, our government schools. It's not the Chinese government that's responsible for the poor academic performance of American youth. And the fact that the content on TikTok seems to be tailored to a much lower intellect than in China. Well, of course, the Chinese are doing a much better job educating their kids than the Americans are. So the content just happens to fit the market, right? We're a pretty dumb market. I mean, the average American teen, I mean, my God. So this content appeals to them. It's not that China is dumbing us down. We've already been dumbed down. And so we're just getting the content that we deserve. That is the problem. The solution is not to ban TikTok, but let's ban these government schools. Let's get the government out of education. Let's have the private sector educating our kids, not the government. That would be a solution to this problem. If you're worried about our children being brainwashed and indoctrinated, get them out of the public schools. That would actually help. I don't care if they want to use TikTok. Let's liberate them from those government schools with a voucher system or however they want to do it. But of course, that's not going to happen. They're going to resist that. Now, I mentioned a little earlier that I thought there was a tie-in between gold and TikTok, because if the Senate approves this TikTok ban, which the House has already approved, and which President Biden has already said he will sign, right? Assuming he can remember how to do that, but this is going to pass. And after it passes, what is China going to do? We're now telling the Chinese government, hey, we don't want this company. You can't operate this company in our country. I mean, are they going to retaliate? I would think so. I mean, I don't think they want to lose face here. I mean, they're our biggest supplier and our biggest banker. So it's like, oh, so all of these products, you can have all these Chinese products, but TikTok's not welcome. Oh, and we can owe trillions of your treasuries. We're allowed to buy all the treasuries we want, but your citizens can't even download our app. I think the way they may retaliate, and again, I'm not advocating this. I'm just pointing out their position, what they could do if they were smart. And I assume that they are smart, right? If they want to hit America where it hurts, they don't have to ban any of our products, right? It's not like, they just start selling our treasuries. They sell our dollars, which they're already doing. They just step it up. I mentioned that gold sold off after we got the hotter than expected inflation numbers, but it rallied back today, gained back most of what it lost. Bonds also sold off yesterday, and then they sold off again today to add to yesterday's losses. So that already shows me, again, that the investors are starting to figure it out. More of them will, and the moves are going to be bigger, that the inflation fight is over only because inflation won and the government conceded. And that is bearish for bonds, and that is bullish for gold. But if the Chinese decide that the way they want to retaliate is by selling dollars and treasuries faster and then buying more gold, which they have a short window of opportunity. Where is that window of opportunity? It's coming from the liquidations out of the GLD. So while Americans are foolishly selling off their gold to buy Bitcoin ETFs, that gives the Chinese a window of opportunity to unload their treasuries and buy that gold. And that is a great swap for China because they get rid of paper and they get real gold. Meanwhile, Americans get the short end of the stick. They sell their gold and get digital nothing. But I think the Chinese will probably try to take advantage of this. And so what does this mean for Americans? If the Chinese do what I'm saying they could do, and it's in their interest, so they should do it, it's going to hurt America. It's going to hurt America a lot more than banning TikTok is going to hurt China. Because if China really starts divesting of its dollars and treasuries and buys gold, what is that going to do to the value of the US dollar? What is that going to do to consumer prices and interest rates here in the United States? It's going to send them much higher. So in addition to not being able to use TikTok, Americans are going to pay higher prices for everything they need to buy, and they're going to be paying higher interest rates if they need to borrow the money to buy it. So again, we are completely underestimating the Chinese position in this ridiculous battle that shouldn't even be fought. But again, I think the government is just using this ruse of the animosity that people have to this Chinese boogeyman to dupe us into surrendering our rights. Right? That's always how the government usurps more power. They get us to fear something, and they say that we need more government to protect us from this contrived threat. And so that's what they've done. And that's what Congress is signing on to. At least Trump, who originally talked favorably about banning TikTok, has now done a 180, and he says that we shouldn't do it. So at least he's evolved that position in the proper direction. What the source of that 180, I don't know. Maybe it's legitimate, genuine. He thought about it. But this Congress is going to pass it. So again, this is bad news for America. It's bad news for American liberties, just like the tariffs. Trump puts the tariffs on China. China doesn't pay the tariffs. Americans pay the tariffs. It's a tax on Americans. And the ban on TikTok is not a ban on China. It's a ban on Americans. It prevents Americans from using a Chinese product, but it opens up the door for the government to ban Americans from using all sorts of products. And it sets a very bad precedent that ultimately will be abused and exploited. Anyway, that's it for tonight. Again, if you want to buy your gold and silver, don't wait for a pullback. Call up Schiff Gold and just pull the trigger. And again, if you are an investor and you want a leverage bet on gold and silver, get into these gold stocks. Gold stocks actually outperformed today. They recovered more than they lost yesterday. So for a change, gold stocks were down yesterday, and today they were up more than they were down. And so they're ahead over the 2 days, even with the hotter than expected inflation numbers. So look, I think we've got an explosive move up coming in in the mining stocks. I mean, people are going to be shocked one day to see how much these stocks are up. So before you get shocked, buy them. You could buy the individual stocks. You could just buy any of the top gold stocks. Again, I prefer my own fund because I think Adrian Day is the best manager. That's why I hired him. So the Euro Pacific Gold Fund is the way I think that you want to buy gold stocks to get a diversified portfolio managed by Adrian. If you're a do-it-yourselfer, my funds are available, no load. All 5 of my funds, including the gold fund, are no load on all the major discount brokerage platforms. So look up Euro Pacific Gold Fund. If you go to my website, europac.com, you can look at the funds and you can pull up the fact sheets and all the symbols. You can read a prospectus and then you can go buy them. In fact, you could buy my funds. If you don't have a brokerage account, you can just buy my funds right on the Europac website at europac.com or call the phone number there and talk to the representatives. We actually also offer wrap accounts where we'll manage a portfolio in my mutual funds. And of course, we have separately managed accounts. If you're a larger investor and you don't want to own a fund, you'd prefer to have the stocks in your own account, then you can set up a separately managed account at Euro Pacific Asset Management. So again, our phone number is on the website at europac.com. That's it for now. Have a great week, everybody, and I'll be back soon.